We have published today a report called Winning in Growth Cities, which talks about capital floating around the world. Number one still is New York City, number two London, number three Tokyo. Very clear number one is New York still, but London has gone up by 40% in the past year. Tokyo has gone up by 30%, so you can see that the gap is closing. What that means for Europe is that money does not only flow cross-border into London, Paris, Munich, and other gateway cities, but has now chosen to go into cities that are so-called second tier. A lot of activity going on in Madrid and in the Spanish peninsula. There's a lot of activity in the Netherlands, in Central Europe. So investors have an increased appetite for slightly more risk around Europe. The gateway cities probably have been priced in such a way that that's necessary to get the returns. Another key driver behind the money moving out to different parts of Europe is obviously the fact that the technology factor is really important, notably in London, but also in Berlin. This is an increased activity cross-border. Of the total capital invested in the last year, 45% was cross-border. One of the very interesting takeaways from the past year is that London has now overtaken San Francisco as the technology hub in the world, which makes it a key driver for talent. Technology attracts talent, and that talent are potentially the millennials coming into London who want to live, work and play in the same environment with accessibility and convenience. That's what London has to offer. It's a key trend in the occupational markets. The reason being why London still sees growth in the rental cycle.